Hey Trade Pros, welcome to our channel, and it's Victor from TRADEPRO Academy. In today's video, what we're going to be doing is breaking down another volume concept that we've just been littering throughout our channel. And it's the most important aspect in trading because volume actually does move price. Now, we're fortunate enough to be able to trade the futures market that has an insurmountable amount of volume that is in a centralized exchange, so we can see all the ebbs and flows of buyers and sellers. This makes it a lot easier for us to understand volume concepts. So in this volume concept, what we're going to be breaking down is the volume profile and how to identify inflection points using a volume profile. Now, this is extremely important because it allows us to identify the shift in market dynamics where sellers are no more or buyers are no more and markets are expected to turn. So when we take a look at volume profiles, we get a lot of data and a lot of information. So we're going to go through a lot of that in this video. Even if you're new, stick around because you're going to want to know a lot of these concepts so you can understand the volume profile a lot better. Now, these inflection points are very important because they're based on real big traders, institutional money that actually turns price around and market dynamics around. So if you're really excited to learn about this and identify where those big traders are actually sitting so you can join the crowd, wait for this intro and we're going to dive right into this video. First, I'd like you guys to hit that like button, hit that subscribe button, because we're going to dive into a lot of concepts in the volume profile, so have patience. You're going to learn a lot throughout this video. Let's jump right into this intro, and then we're going to be on the other side taking a look at these concepts. Volume profiles, they have a plethora of information. One of the biggest pieces of information are inflection points, meaning where markets actually shift the tide in the trend. How often have you looked at a trend that just goes up aggressively or down aggressively, and you're like, where do I get in on this, right? I've missed this whole thing. And you start actually going counter trend on a lot of it because you're thinking, well, a lot of it can't keep going up, it can't keep going down, right? It's a very common concept for newer traders. Now, the volume profile actually allows you to see where that inflection point or where the turning point of this big trend can be, and also how to actually join in on the large trend. So it allows you to combine both those two aspects by understanding where the big money and large players actually sit, to give you an idea of what the trend direction looks like, what the strength of the potential trend is, and where it could possibly turn. Now we're going to take a look at these volume profile inflection points to a deeper level, right? In terms of analyzing the volume profile first. Now, the volume profile, it's pretty much our favorite tool, but we're going to have to jump into a chart for us to take a look at this on a deeper level. Volume profiles, as you know, are going to be based on distribution theory and auction theory, allowing us to see where big volume sits and where little volume sits. Taking note of peaks and valleys in the volume profile will allow us to start understanding where these inflection points are. But in order for us to do that and break this down furthermore, we're going to have to dive into a chart. We're going to have to dive into the computers and show you a plethora of examples and also a breakdown of what we're going to be talking about today. So I'll see you guys behind the screens. We'll break it down, jot down what exactly we're going to be looking at, and we're going to explain everything and show you a viable strategy to not only read the volume profile, but to find key inflection points where trends are expected to turn or continue based on institutional size, strong-handed traders. So if you guys are even more excited about that, just give me 2 seconds and we're going to jump into the screen. So I'll see you guys there. All right, welcome to the screen, everyone. What we're going to be doing is breaking down the volume profile into multiple different concepts here so we can understand where the inflection points actually sit. So right now on the screen, what you can see is a breakdown of TradingView. So we're going to take a look at a few different charts. Obviously, when it comes to day trading futures and trading futures in general, I would recommend something like Sierra charts because TradingView has its capabilities, but it's just not a futures trading platform, let's be real. And the things that I'm going to be showing you guys are native to Sierra charts and other more advanced futures trading platforms that you can find, right? Not just Sierra charts, but other ones. So let's take a look at what we got going on here. Realistically, what we're going to be talking about today is 5 general concepts, right? Maybe 6 general concepts. The first one being, what is the volume profile, right? We're going to take a generalized approach for the newer traders, breaking that down. And we're going to also be talking about volume profile inflection points and their relevance in trading, right? Just a little introduction to what it is that we are looking at. We're going to be going through analyzing volume distributions, right? Distribution theory, because this is the core concept of understanding how volume profiles actually move, right? The reasoning behind the movement and the expected movement from said volume profiles. Then fourthly, we're going to talk about interpreting the volume profile histograms and looking at them for effective decision making. This is where we talk about what different volume profiles we use, parts of the volume profiles, right, and how necessarily we're going to use them. And then we're going to be combining, right, two key aspects that we've talked about to identify set inflection points. And we'll take a look at some examples of how this works to wrap everything up. So first and foremost, right, step number one, we have to break down the volume profile and the key information in said volume profile that we're going to be looking at. So if you take a look at TradingView here, right, we got a lot of stuff here. This is a general volume profile that's actually a visible range. Now, what a volume profile does is it reflects the volume at key levels on the asset. So an asset's going to have multiple very large volume areas and very small volume areas. So what a volume profile does, it represents a visual vertical histogram of volume at key levels rather than based on a time period, right? So, and this allows us to see if there's a lot of volume trade at a certain level, right? Or if there's a drop off, or if there's very little volume. Now, the volume profile, it has multiple different aspects that we're going to go through, but generally speaking, you can visually divide it as a newer trader into large volume areas or small volume areas. Those large volume areas generally would suggest that price would gravitate towards them, right? Price is led by volume, and small areas allow volume to pass through easily, right? So to speak. So the volume profile, as we've talked about, has multiple key aspects. We're going to break those down a little further as we get into this, but we take a look at the value area. We'll take a look at the point of control, the value area highs and lows, and low and high volume blocks, right? Those are the key core concepts that we're going to be taking a look at today. Now, as we dive into this more, we have to also understand what inflection points are, right? What is an inflection point in the volume profile? What is the relevance of an inflection point in trading in general? So generally speaking, markets move in waves, right? We'll see that markets go up, markets go down, they stay stagnant in a rotationary environment, right? A compression or an expansion, generally speaking. Now, when we look at inflection points, an inflection point is an area where the market actually changes its structural dynamics, so it actually turns and it starts moving in the opposite direction. So if a market is going up aggressively, right, there's going to be an inflection point where the market turns down. If a market's going down aggressively, there's going to be an inflection point where the market turns up. Now, for example, in this screen over here, you can see that the market starts dropping at 46.30 or so. We drop down and there's an inflection point somewhere at 43.60, 43.50. That turns prices back up, right? If I zoom out and I get a little more information on the volume profile, one of the things that we'll notice is that there's a fairly thick volume block over here, and as soon as price drops off, that is where price actually starts turning around. So that becomes an inflection point in the markets, right? This is a core concept that we're going to study as we go through this video. So you can see where prices, right, inflect and actually turn are areas on the volume profile where the volume actually goes from thick to thin. Interesting concept, right? So these inflection points are areas where prices actually fade the current trend. It's very common, like I've said before, that traders look at a current trend and think, oh, well, it's gone up for like 60, 70 points. It has to turn. So they start selling into this very strong bullish trend without understanding that there is actually a way to identify where the expected turning point of said trend is. And those are what we call inflection points. So as we go through this, we're going to start diving into what actually creates an inflection point, and the understanding from that starts from distribution theory and identifying distribution theory. This is a concept that we've talked about a lot in the past. We've got a lot of videos on it, and distribution theory is The third concept what we're going to be talking about today, analyzing it, breaking it down, and making sure that we understand it fully, because this is the core concept of how not only markets move, but where big traders and small traders might appear in the market to give you a better sense of where to get active in general. So if we just take a generalized approach to distribution theory, or commonly referred to as auction theory, it describes the aspect of trading that is compression to expansion, right? So if we move this along here and we start breaking this down in terms of just theoretical concepts before we start taking a look at it from an actual perspective. Distribution theory is the understanding that prices move from balance to imbalance to balance again, or compressive states where no new information is met to expansive states where new information actually moves the markets. So this is what we can tie into strong-handed traders and weak-handed traders. About 70 to 80% of the time, markets move in a range or a compressive state. This is what we call balance, right? Distribution theory suggests that prices move from balance to imbalance to balance to imbalance to balance, right? Continuously, they ebb and flow in this directionality. So when we talk about distribution theory in that regard, right, a balanced situation is an area where there's a lot of volume, realistically. And it's a compressive state where markets move sideways, 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 and there's an expansionary move, right? So in these compressive states, what happens is that there's no new information. There's no new information. What we have is strong-handed traders that appear at the tops and the bottoms to actually compress price. At a certain point, right, strong-handed traders are going to come in at the top and actually make this move that creates this expansionary zone until no new information is back into the markets and we get this compressive area before yet another move to the upside. So these compressive zones can be seen on larger concepts or more of a tight concept. You can see if we break down a compressive zone, right? One would be over here, one would be over here before an expansion, right? If we take a look at where the volume profile lies, you can see it's a block of very, very thick volume until you get that expansive move, right? It's very similar to this area here where we have a much larger expansive move, or sorry, a much larger compressive move before we do get a little expansion. And you can see now we're in this area where we have this very tight compression before a potential expansion. So understanding these concepts of distribution auction theory, right, allows us to identify where these compressive zones are and how we can actually trade them based on strong-handed traders entering the market. Now, these are important because when we talk about distribution theory, we have a core concept of a volume profile ledge, right? So a distribution can be blocked off in a block like this, right? We can block off this distribution over here, as small as it seems. We can just circle, right? So this distribution block, what happens is that the tops and the bottoms are going to be met by buyers and sellers realistically, right? These are the ledges. A ledge is where volume drops off from thick volume, right? So thick volume is the home, if you will, of price and where price wants to stay, right? Price is attracted to very thick volume, and these ledges, right, are the areas where big volume drops off into thin volume. And this is where we would consider that at these ledges, strong-handed traders are active. So when we talk about inflection points, this is the first concept that we want to understand. So a distribution can be very wide. For example, the distribution that I just circled goes from about 4,270 all the way up to 4,305, right? This is about a 30-point area. That's $1,500 a contract on the ES micros. It's a very, very wide area. Now, at the tops and the bottoms of this area, what we expect to see is turning points or an inflection. So when we have this 30-point move, if we block it off, let's say this block that I've drawn right here is a 30-point move. When we start moving up, at the tops, we expect an inflection point of sellers to push it down. At the bottoms, an inflection point of buyers to push it up, right? So this is the counter trend move where you have strong-handed traders that enter into the market. So step number one in understanding inflection points in the overall market is understanding where the large ledges of these distributions actually sit, right? This one, maybe we can move it down a little. It doesn't seem like it's quite just there. If we move it down to this, like maybe lower 60, that seems to be the bottom of the distribution. So if I take into consideration what's going on here on TradingView, we can see that this is a daily chart. And this daily chart allows us to find these very big distribution concepts and where these big distributions are. When we take a look at a distribution definition, we find an area that looks like a belly, right? And at the edges are where price drops off to either end. Within this area, it's a very large volume block that is considered a distribution. So anything outside where volume drops off like this, right, is the imbalanced area. So this is balance, and everything outside that's low volume is imbalance. These balanced areas are often connected by imbalances that lead to the next balanced area like this. We go imbalance down to here, we get to balance over here, we get to a lower balance, we get to balanced, and then we start getting off into imbalance, right? And price generally likes to move oscillation, run through the low volume area, oscillation, run through the low volume area, oscillation, so on and so forth. So when we understand these concepts, not only can we understand where the trend direction is, but where we can expect these inflection points on the market to actually appear. So these inflection points in the market that appear, right, are going to be found at the ledges of the large distribution, whether we are outside or inside of those areas. All right, let's take a look at a few examples here. We're inside this distribution block. The tops are getting rejected here, and the bottoms are getting rejected. If we can't see it, we can just simply zoom in on a lower time frame at this time. So let's go to an hourly chart. It'll give us a better understanding of what's going on. So the volume profile here obviously changes because it's dynamic, but if we're within the large distribution, right, the tops and the bottoms, look how well we actually sustain it on these rotations, right? It's very, very well held out. Now, if we take a look at another distribution area, we can go into Sierra charts to get a better understanding of what's going on here, right? So Sierra charts breaks it down into multiple different distributions. The large area here on the right-hand side, we can break this down into 1, like 2, 3, and then 4, right? And we can see how these areas actually hold out. But let's deep dive into that a little more. So when we start analyzing, right, volume profiles, we start analyzing distribution theory. We understand where these balances are, where these strong-handed traders are, and where these protective blocks are, right? This allows us to have not only directional expectations, right, based on where these distributions sit, but also key inflection points. For example, if we open and close within or outside of a distribution, gives us a lot of information. So if we open within a distribution, we expect the bottoms and the tops of the distribution to hold out as inflection points. If we open outside of the distribution, we expect the outside regions of those ledges to hold out as inflection points, right? It's just simple as that realistically. So when we start looking at this, right, let's just draw some quick distributions here, right? We'll look at an area over here, right? This like 40 region like this. We can call this yellow block a key distribution. We can call this one down here a key distribution. We can call this one over here a key distribution, right? And so on and so forth. So if we take a look at this, what happens in these regions, right? Keep in mind that these red arrows indicate the close of the sessions. So we dump into this area, we close below it, right? So the top end is going to be used as an inflection point, right? The bottom end is going to be used as an inflection point. You can see how well over the past few sessions that the top end and the bottom end have held as the inflection points. So understanding where these bellies and distributions are the first step in understanding inflection points on the volume profile. But we can deep dive a little more into that and start understanding the volume profile from a different concept when it comes to what volume profiles we use and how individual day sessions can impact the inflection points. So remember, step number 1, we identify the inflection points based on our distribution levels from a larger standpoint. But to understand that, we have to understand what we're looking at, right? We can't just blindly follow these rules. So what we're looking at here is a 50-day profile on the right-hand side, right? This is a cumulative 50-day profile. On the left-hand side, we have individual volume profiles that have all of these pretty colors, and they're attached to a TPO or a market profile. Each one of these combinations is a separate session, right? The green TPO chart is the ETH or the extended hours trading session that we're currently trading. and it's attached to its own volume profile. The blue one is the regular trading hours or the US Open on the futures market, and it's attached to its own volume profile. So when I take a look at this, right, we have multiple different sessions, multiple different areas along with our large distribution. Remember what we talked about in terms of where our large distribution sits. We said somewhere into these low 4300s all the way down into like the 60 area, right? Those 50s. So if we mark this, if we mark this green box as our distribution area, right, we have the tops and the bottoms as our number one key inflection points based on large distribution theory. Now, there's another concept of volume profiles that we talked earlier about and that we're going to break down right now. We have areas in the volume profile known as the point of control, the POC, the value area high, and the value area low. These are all important concepts that define the volume profile. First and foremost, the POC, the point of control, is the area where we have the heaviest volume traded. On this chart, it's denoted by this purple line, right? This is the heaviest volume traded. Generally speaking, we don't open trades in and around that area, but it's going to serve us a good purpose, right? The most volume traded at an area allows price to rotate and gravitate towards it. The value area is 70% of the volume traded in a session or a cumulative session. When we look at the individual sessions, the green TPO suggests where the value area is, and it's denoted by these gray lines, right? These gray lines are the top and the bottom, which happen to be the value area high and low, that keep the thickness, right? The most amount of volume within that day session in that area. So you can see that these volume profiles, they don't have a definitive value area that's drawn because I do want to see what's actually inside the value area. So when I look at this, right, I can just denote the value area high and low by the gray scale areas, right, these gray lines that denote the high and the lows of the session. So when I look at this, right, and I want to add to my inflection point analysis on the volume profile, a key concept is virgin or naked points of control and value area highs and lows. So what are those? Naked or virgin value areas, highs and lows, or POCs, point of controls, are areas that extend on a profile, right? So a point of control, let's take, for example, a virgin point of control right here is a point of control that extends without the next day, the next session actually trading back within it. So this extension over here allows us to identify a very key inflection point start because it's a very thick area of volume that was once traded that hadn't been traded since, and this area becomes a very, very key inflection point. It's the same thing with value area high and lows that are naked or virgin that have not been traded again. You can see down here is a cluster of them, right, which happen to be not only yesterday's low, but the prior session low as well, allowing for a key inflection point and a very large 30 to 40 point turning point, which is $1,500 to $2,000 per contract opportunity right there. So when we talk about these areas, we want to identify virgin or naked points of control and value area highs and lows as key support resistance areas as inflection point moves. When they cluster together, and there's a lot of them that are very, very close together, it allows us to solidify the potential of the inflection point in that trade. Not only that, but if we combine it with our distribution low on a 50-day profile or on a larger profile, for example, over here into this 60, and just around that 60, around 58, we have those virgin areas. This combination of the two allows us to find a very, very key inflection point where prices are expected to turn. So if prices actually move above into the next distribution above, we have a very key ledge over here into these 20s with a virgin point of control that will allow us to see a potential reversal or inflection point in price. The same thing all the way up here as well. So when we combine these two, right, this is what it looks like on a chart. So this is an example of the micros that we're actually trading, the micro futures. You can see, right? So here's a breakdown of an example, right? A little case study here of some of these trades. Actually, taking on the micro futures. So the micros are 1/10 of the mini, and I like to trade micros on an occasion so I can get different fills, right? So I can trade larger size, be able to trail. There's a plethora of different reasons, but the realistic approach here, it stays consistent with what we've been talking about so far. So if I take into consideration where the key inflection points of the market are based on the distributions that we have, if we just draw this up here, what we're going to notice is that we have a few different distribution blocks. So the first main distribution block is going to be this whole region somewhere here, right? It's going to be a massive region over here. We also have a very defined ledge that sits somewhere into this low 80, right? This is going to be a very important area that acts as an inflection. Now, what you'll notice is that in these areas, right, not only at the tops do we have some of these significant inflection points that we were talking about, right, down here as well, but into this low is what really, really drives home the area that solidifies that there is not only a large distribution bottom low that's shaping up, but also we have the multitude of naked or virgin value areas that stack up in this case. So we have the value area low from a prior session, the overnight value area low that's actually a naked area, and then we have the value area low naked area from the prior day. So these areas, in and around these areas, I'm going to learn to identify these, and I'm going to watch these areas, confirm them with order flow so I can actually get that large inflection point move. So you can see here we open somewhere around the, I want to say around the 90 on the S&P 500 futures, and we get this very significant drop from the top end of the balance, which is an inflection point area, right, where we have these tops. So this is an inflection point, and what happens in this area, we get a very significant drop, right, about 40 points, right? 40 points is a very large move in the S&P. Now, after a 40-point drop, it's going to be very difficult for everyone to start buying this and start looking at this as a buy opportunity. However, if we stack up our inflection points that we discussed throughout this video, this is the reason, here I took a little stop, but this is the reason why I'm getting long into these lows, right? A plethora of contracts for that continued move. When we get up into 80, it's a key inflection point as well for a multitude of reasons, right? It's a ledge on the volume profile, a large one. It also stacks up with some of these naked areas. So I have to trim some of the position in that region, right? As long as we move back above that, what is the general target? 4,300 area, right? The large inflection point where we pull off and cool down about 10 handles, 12 handles from the area. So to summarize this, right? Throughout this video, we talked a lot about the volume profile, different inflection points, so on and so forth, right? To break this down and get a solidified understanding of how to use the volume profile, step number one is understand the key components of the volume profile, right? The volume profile has a lot to offer, but if you understand where these key components are, what they mean, right, it gives you a better understanding. So the key piece of the volume profile, we have a 50-day profile and we have individual profile sessions. What we're going to do is understand distribution theory. Remember, we want to find blocks of a lot of thick volume, and at the ledges, at the extremes, these are our first inflection point areas. We can solidify the inflection points and areas where prices can revert and change directionality based on understanding the naked areas that come from a point of control that extends, or value area lows and highs that extend. Those are virgin or naked points of control, value area lows and highs, and cluster those with our distribution ledges to identify those key inflection points, right? So this is the main concept of finding this, and in this alone, you can develop a great strategy for day trading futures, right? You can couple this into different assets and look to swing trade this. There's a lot of uses for this. So I really, really want you guys to watch this, right, solidify this, and understand the concepts that are created here, because this is a mass area of my trading system and strategy presented here, exposed to you guys here, so take that into consideration. So with that being said, enough of the screen time. Let's go and wrap this up. I hope you guys enjoyed this video, and I'll see you on the other side. Now, keep in mind that these volume profile inflection points, what we've covered throughout this video, are not definitive by themselves, right? If you have a tight risk management, you're going to need other things to help you confirm these areas. Now, generally speaking, if you find a very good inflection point by combining a lot of things that we talked about today, and you have a wider stop, there's a pretty high probability you're going to find those big turns in the market. Those are the massive turns, the massive fades that result in huge profits. Now, they're not easy to catch, but they are the biggest potential profit makers in the market. When do markets turn? Now, if you want to solidify these inflection points with more confirmation, one of the best tools that we've got is order flow, because it allows you to see where the real buyers and real sellers in the market actually sit. So with order flow, like the depth of market tool that you can find on our YouTube channel, especially on our website at TRADEPROacademy.com, you can understand these shifts in dynamics to a more granular level that add to the volume profile inflection points. To summarize, volume profiles can help you identify where buyers and sellers gain strength or start to weaken. These are supply and demand areas where strong-handed traders shift the tides, and you can see areas where trends are expected to turn and market dynamics are expected to turn. Using the volume profile, you can find inflection points to identify where uptrends are starting to die down, and you can look for a downside move, or the opposite for a downtrend. So understanding these dynamics and how they actually sit, what is represented by the volume profile, gives you a better understanding of how to actually trade these aspects. Now, these volume profile concepts can increase your chances of identifying profitable moves, but again, you should consider these in conjunction with your strategy system and something like confirmation like order flow. So I really want to thank you guys for watching this video. I want you guys to hit that like button, hit that subscribe button, and make sure to check out our free futures course down in the link below. It is the first thing in our description, and we break down more concepts about volume profile, but as well, we talk about order flow. So order flow in terms of the depth of market, that gives you an insight on how to actually trade the futures market from a proprietary trader's understanding, right? These are concepts that I've pulled from other traders, hedge fund traders, proprietary traders, to create this system that has a high win rate. So I'll see you guys in there. Go check that out. And for more information, check out TRADEPROacademy.com, and I'll see you around in our live trading room. Thank you, and take care, everyone.